What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on Tesla stock.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on a price chart and how we get there. Then we'll continue with the fundamental news and I will show you why we have this massive sell-off in its price and what should we expect from the fundamental standpoint. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you the next potential movement for this asset. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this point and I've told you that we completed 3 out of 5 waves from this bottom to this very point, and I've told you that we should find the bottom of our 4th wave, and if it is the case, if we completed the 3rd wave right here at this very top, we should have a retracement in the shape of simple zigzag. And at this moment I've told you that most likely we will hit some lower targets, and my main assumption was that we should land at least at the golden pocket range, and statistically it is the most probable range of trend reversal, and we went lower. As you can see, with this movement to the downside we went lower, but we broke this range of support with the flying colors. And with this breakout, most likely we should land at the next potential range of support, and definitely it was the 0.786 Fibonacci retracement level at the price point of $841.86. And let me make this tool a little bit longer. As you can see, we hit this range to the tick and bounced back to the upside. And I have to say that this movement to the downside is very technical. We should have 5-wave structure, strictly 5-wave structure inside our C wave. And from the Elliott wave perspective, we have these 5 waves inside this wave, as you can see. And this means because of this structure, we completed all 5 waves, and most likely it is the lowest point of the price action, and most likely from this range we will hit even all-time high in upcoming months. So, and I will show you what should we expect next in details in just several minutes. And for now, let's continue with the fundamental news. And let me show you why we have this sell-off in its price. Definitely, the main news for now related to Elon Musk is his Twitter acquisition. And let me show you this article on theverge.com, and it was published on April 29th. And it says, Elon Musk unloads $8.4 billion of Tesla stock to finance Twitter takeover. And let me quote you this. Elon Musk sold around $8.4 billion worth of his shares in Tesla this week as he seeks to line up the money to buy Twitter, according to filings with the US Securities and Exchange Commission. But the billionaire claims he won't sell any more Tesla stock after today. And it's quite weird definition, after today. Musk sold the bulk of his shares on Tuesday and Wednesday, offloading 4.4 million shares in the filings show. He sold another 5.2 million shares on Thursday, after which he tweeted, "No further Tesla sales planned after today." And I have to say that because of this massive sell-off, definitely we have this decrease in its price. And let me show you the structure of his acquisition of Twitter and the financials that he should pay in order to buy the Twitter. As you can see, $13 billion will be a buyout loan from these banks, from Morgan Stanley, Barclays, Bank of America, and so on and so forth. And $12.5 billion will be the margin loan against Tesla. And also these banks have some stake in this loan. And $21 billion Elon Musk should pay in cash. And definitely he doesn't have this cash position in his hands. And that's why he had to sell some of his Tesla shares. And that is why, let me show you the structure of these sales. As you can see, we have an execution date that was on April 26th, and the file date that was on April 28th. So, and he sold from the price of $999 all the way down somewhere to $850, maybe at this range. And I have to say that right now we have the SEC filings only for $8.4 billion, as you can see right here. And we don't have another $12.6 billion. But let me show you that the execution date was on April 26th, and right here we have April 27th. Somewhere here we have this date, as you can see, and this means we had at least 2 days left, Thursday and Friday, to see the completion of this sell-off. And that is why, in my opinion, Elon Musk posted this tweet that no further Tesla sales planned after today. This means after Friday he won't sell any Tesla shares. This means most likely he already sold the entire amount of $21 billion on Tesla, and this means from the technical standpoint we have no more bearish pressure on this asset. But on top of that, let me show you that Elon Musk might be forced to sell even more Tesla shares, and let me show you this article. We are on wallstreetjournal.com, and this article was published on April 28th, and it says Elon Musk's Twitter funding puts more of his Tesla holdings at risk. And let me quote you this: a key part of the funding plan includes borrowing $12.5 billion from loan backed by more than $62.5 billion worth of Tesla shares that Mr. Musk owns, or about 40% of his stake at Wednesday's closing price of $881.51. Tesla and several banks have put in place rules that would require him to put up more collateral if the company's shares price fall. Using Wednesday's price, Mr. Musk would need to satisfy the banks with more collateral if Tesla shares fall to 43% to around $504. In that case, the banks would require a rebalancing that would call for an additional $14 billion or 28.5 million shares at that level. That's on top of the 70.9 million shares needed at Wednesday's price for the original collateral. Similarly, Tesla has long kept the amount Mr. Musk is allowed to borrow against his shares at 25% of the total value of the pledged stock. This suggests that if the deal used Wednesday's share price, he'd need to pony up more if those shares fell more than 20% to below $705, and Tesla enforces its policy. These arrangements mean that in certain scenarios he could be pressured to sell Tesla shares. And definitely this scenario doesn't have the highest probability rate, but it is still possible. And this means we have to be very cautious, because in some levels Elon Musk will be forced to sell even more of his shares. And this is how you should do your own due diligence in order to know all the pros and all the cons of existing position. So, and for now, we don't have this bearish pressure on the stock because we are far away from $705 and even $504 of crucial points for Tesla. That is why, in my opinion, we can see higher price targets from our current range. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, as I already mentioned, we completed all 5 waves to the C wave. This means from this bottom, we have probably the bottom of our 4th wave. And as you can see, let me zoom out a little bit on hourly time frame. As you can see right here, we have this overlapping of the 4th wave on the territory of the first one, because we have this is our 1st wave, 2nd, 3rd, 4th, that is deeper than the top of our 1st wave, and we are about to hit some higher targets with our 5th wave. This means we cannot have this wave as our motive wave, because we have an overlapping in these 2 waves, and this means we cannot have higher targets with the next leg to the upside. And how we can project these targets? If I pull the Fibonacci extension tool from the bottom of the 3rd wave to the top of the 3rd wave and to the bottom of the retracement, so far we have this point as our lowest one. And definitely next range where we might hit is 0.786 Fibonacci extension level, and it is almost the confluence with our top of the 3rd wave. And next range is 1-to-1 extension, and definitely this range is the confluence pretty much with our all-time high, and in my opinion it is the most probable range of the top of the 5th wave. And this means from our current price we might have up to 39% to this range, and the downside potential, if you want to swing trade this asset, is roughly 8.7%, and the risk to reward ratio is really impressive. It is more than 4-to-1, And this means for now we have a decent setup even for swing traders. But if you want to invest in this asset, nothing has changed fundamentally. This asset is very attractive, and as you can see, we have very good increase in volume right here. This means this range of price is very attractive for the investors as well, and a lot of investors loaded up its position right here. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack.